This is our Forex blog for January 18th, 2012. And like we do most days, we want to buy the strong currencies versus the weak, and we want to sell the weakest versus the strong using our currency meter. This is made up of, on the top, comparing the dollar versus all the other pairs, and so on and so forth. And the histogram is made up of 5 different statistical tools we've come up with over the last 6 years and have enhanced over those years. 3 of them measure the direction the dollar is going. What percentage is the dollar going up or down versus all the other pairs? And 2 of the tools of the 5 measure the intensity, statistical intensity of that direction. So we average them together. Instead of having to look at 5 indicators or even 2 or 3, you have 1 indicator, and underneath that you have a daily trend, weekly trend, and monthly trend. So if you have real-time weakness at and above the dotted 80 level, which we consider significant, and anything close to that underneath is significant as well. This is shows weakness, incredible weakness, and so forth. When you see incredible weakness like that, and it's in the direction of the daily and preferably also the weekly, that trend's more likely to continue. Trends don't go up or down forever. They typically go up for an hour to 3 hours, and you have 15 minutes to maybe 2 hours max of counter trend move. In this case, about 15 minutes of pullback, and because the momentum before is almost twice as much, and because the daily, weekly, monthly trend is down, it's very likely to revert back into a downtrend. So when you see some strength here, you're looking for the weakness to resume, and you want it to resume against one of the strongest currencies. So you scroll back. Obviously, the euro is showing some strength today, but the weekly and monthly trend's down. The Australian is showing mostly weakness today, but the weekly and monthly trend is up. And the New Zealand is showing strength on all time frames. So the New Zealand was the highest odds one to be buying today, and you'd want to buy it against the yen, which is pretty much weak on the daily and weekly, and also the dollar. Looking at the New Zealand dollar, you can see that it was above the hourly. Last night it went up. You got a nice little pullback. Here's an hourly moving average, which when you have a currency that's this strong, the New Zealand is the strongest one, and the dollar is one of the weakest ones. So when it's going up and it pulls back to the hourly, it's very likely to find some buying there, and it's obviously in a support area. I hit the plus button to zoom in on this. We have some counter trend buy signals here as well, and when it hits and finds support to hourly and starts to go back up, I typically buy it when it goes above the previous bar's high right here at 15. My stop would be underneath here around 6. I have a 10 pip stop, and notice our intelligent trailing stop got you all the way out up here at 59. Let's just round up to 60. So from 15 to 60. Very nice big win. And here's the upper containment band and my Fibonacci area. I draw these each night so you don't have to. This is a Fibonacci profit target level, which I thought was likely to be the maximum high today, and it was. I mean, the market went a little bit above it. The middle of this is the exact to the pip area that in my analysis shows, and I put a little padding above and below because Fibonacci areas are not sometimes the market stops at them to the exact pip, and sometimes to within 1 or 2 pips, but typically this range is an area where the market's likely to have some selling. People are taking profits in this very strong currency. Here's the New Zealand yen, which has the same type of pattern. It's above the hourly and it went up, and it pulled back and found support here. And this is the reason why you want to wait for it to go above those bars high. Here it found support, and so you wait for it to go above this bar's high right here. And if it were going to go sideways here and go down, if you just bought at the hourly, you might have a loss. But by waiting for price to confirm, it's going to go back up. You get in at, you pay an insurance policy, which is getting into the trade maybe 3 to 5 or 6, 7 pips worse price. But if the trend was going to continue down, you avoid a loss. And so look at it by waiting for price to confirm. Look at it kind of as an insurance policy. You're in this trade right around 52, and the trailing stop initially got you up here around 80, 81. So it's about a 30 pip win. The patterns that you really want to see are incredible strength followed by less weakness. Let's look for some of the other patterns that look nice. And if you see the euro having mostly strength and the dollar and the yen are weak, this is a pattern that I love right here. Extreme weakness followed by just 15 minutes of strength, pretty much half the visual strength compared to the weakness. At 6 o'clock right here, you want to look for the yen to go back down. So what currency was extremely strong during this time? It might have a little tiny amount of weakness right around 6. That would be the euro. So the euro yen would be a good one to be looking for a buy at 630. Now the only downside of buying the euro yen is that the weekly and monthly trend of this one is down. The weekly trend of the yen is down as well. But the real-time momentum, you can forget the daily, weekly, monthly trend. Focus mainly on the real-time. Look for a pattern like this, twice as much weakness as strength, and look for that to resume. This just adds to your probability. You can trade more lots when all the time frames line up because you're more likely to find a 20 to 50 pip move. If the longer-term trends are against you, the trade's more likely to be a short-term 5 to 25 pip move. So at 6:30, let's bring up the euro yen chart. Here you got that little pullback right here, or I should say 6 o'clock. We're waiting for a pullback. It's above the upper containment band. You look to buy when it starts going back up here at 34, and it got all the way up to 51. So it did go up 15 pips. When it's above the upper containment band, more than likely you want to be really skittish to get out. This first trade might have only given 5 or 6 pips. About an hour later, you got a nice little pullback right here. And again, when it starts to go back up above those bars high at 28, you might be out of this thing at 45. It's a 17 pip move. And again, notice how my Fibonacci profit target levels were the high of the day in the euro yen. If you don't like time-based charts, you can use what I like to call range charts, and I find these vastly superior. Typically, one of the ways of using this is when the market's up too much, wait for a 3 to 5 bar pullback, and then after the first green bar, buy it when it goes 1 pip above that high. So you might be in this thing at 35, and again, this thing went all the way up to 51. It's a nice way of scalping, and you have the same exact thing here. Pull back, green bar, wait for it to go a pip above it. It didn't. You have another green bar, wait for it to go a pip above it here at 42. And even if you got out of it somewhere around here, you made 12 pips. 10 pips a day can double your account every 2 months using very tiny amounts of leverage. So you catch a 10 pip move here, 10 pip move somewhere else, 25 pip move, you have a 6 pip loss, you have a break even, you have a 12 pip loss. Your losses need to be smaller than your wins. One thing you'll see on this chart is I have the 1.5 containment band in red, the 2.0 in white, and most of the time the white is the max high. I also have the 3.0 on this, and for scalpers and counter trend traders, most of the time when the 3.0 containment band gets hit, the market's going to reverse. So, it also makes a very good way of catching quick little 10 to 25 pip counter trend moves. You might have made 5 to 10 on here, 5 to 10 on here. And again, I would prefer when these get hit and you see a double top with a little bit less strength like this, this is a much safer sell right here after it's had many chances of going up over about 40-minute period and it didn't. A quick little 15 pip drop there.